Hello everyone. At present, one of the huge negative for Indian market is this recent crude oil price increase, as it increased over 20% in the last 2 months. Regarding the reason, we know around July-August time, both Russia and Saudi Arabia agreed to cut 1.3 million barrels per day oil production until the end of this year, which in turn expects to affect the oil supply. So that's the background. Now yesterday, OPEC plus countries had their monthly meeting, but there was no surprise there. They simply agreed to the old agreement that to cut at least same 1.3 million barrels per day from the daily oil production until the end of the year. However, the show was hijacked by the events in global market and by an inventory report released by the US government. First, let's look at the inventory report. Yesterday, around 10:30 am Eastern Time, US EIA released the change in number of commercial gasoline barrels held in inventory by commercial firms during the last week. Now, as per the government report, the gasoline stockpile increased almost 6.5 million barrels, which is the biggest stock buildup in nearly 2 years, and in the last 4 weeks, it increased over 12 million barrels. Just for info, crude oil is different and gasoline is different. Gasoline or petrol is one of the byproduct that refined from crude oil. I mean, if we refine 1 liter of crude oil, roughly we will get 450 ml of petrol and 280 ml of diesel, and the remainings are various different byproduct. So that's the proportion. In 1 liter crude oil, 450 ml petrol and 280 ml diesel. Also, 1 barrel means 159 liters. So in US, not the crude oil stock increased rather than the refined petrol or gasoline stock. This means in future, refineries don't need to refine as much as they are refining now, and thus the demand for the raw crude oil in the upcoming month will decrease, and also it shows there is a fundamental demand reduction among the US customer as well. Now, if Fed increases the interest rate means or this higher bond yield, both now strengthened the US dollar to 11-month high value. And this strengthening of US dollar further weakens the finances of other nations like Europe, India and Japan, etc. Again, internationally, crude oil is sold or selling mostly in dollars, so that strengthening also expects to affect the fundamental international oil demand, which indeed all pushed the oil price down by over 5% in one single day, which is the biggest loss in the oil price in last 1 year. At this time of this video, WTI crude oil is trading at $84.5 per barrel and Brent crude oil traded at $86 per barrel. So finally, Indian market got one good news. Anyway, then about US market, it also closed really positive. I mean, as we discussed yesterday, the global sentiment was severely dented because of very high available job openings data that released on Tuesday night, which indeed increased the Fed watch probability to over 30% that Fed will increase the interest rate by 25 basis points in the upcoming FOMC meeting. As a consequence, it increased the 10-year bond yield to over 4.8%, which all we discussed in detail in the last pre-market video. In direct contrast to that, ADP, a US private payroll company, releases their monthly change in non-farm private employment data, which comes as just addition of 89,000 new employment in September month. It's almost half of what analysts expected and compared to August month. Again, please pay attention. This is a private data. Government data is due to release on coming Friday. So this not so good employment data reduces the Fed monitoring tool probability from 30% a day before down to just 22% chance. As a result, 10-year bond yield also dropped to around 4.7%. All this drama made the US market to close positive. Thus, in the end, Dow Jones up by 0.39%, S&P 500 increased by 0.81%, and Nasdaq rallied 1.35%. Regarding VIX, it was down by 6%, and from near 20 on day before yesterday, dropped to around 18.5%. Regarding Indian ADR, this US positivity was transferred despite all negative in Indian market. I mean, last night in US, Infosys and HDFC Bank increased by 2.5 to 3%, whereas ICICI Bank increased 0.5% and Wipro increased 1.24%. so indicating both banks and IT to trade positive. Regarding the reason, we'll discuss in a minute. However, early morning gift nifty closed flat 19,483 mark and equating that to our spot market, kind of indicating flat to 10 points gap down today. So that's what happened in the global market. Now let's move to the India related info. First, quickly I like to highlight some important info about the yesterday's Indian market. We know yesterday Axis Bank dropped near 5% in one single day. Why? To answer that, there was a rumor that Axis Bank is going to liquidize their equity to raise 10,000 crore rupees through QIP. I mean, it's obvious no investors like to dilute their shares, so it didn't go well. However, around 3 p.m., Axis Bank submitted the stock exchange filing that is rumor, speculative and factually incorrect. But still, it's almost closing time on the expiry day, so the damage was already kind of done. Then, regarding public sector bank weakness, yesterday in the aftermarket hours, RBI announced that they are going to set up the working group to implement this new ECL method. I mean, ECL method means bank has to assess the probability of loan default upfront and make pre-default provision accordingly rather than the after a default as is the current norm. Now, as per Morgan Stanley, they estimated that this switch to using the ECL method could hit 1% to 2.5% of loans in PSU banks. Here, the official statement was released only in the aftermarket hours. However, I'm guessing some internal people might know this already. Despite all this rumor and negativity around the banks, still HDFC Bank closed positive in Indian market and it increased over 3% in ADR. As during Indian market hours, they officially announced that their loan book growth increased 4.9% in September quarter sequentially. Then regarding Infosys, last night JP Morgan upgraded the stock from underweight to neutral. That's why in ADR it increased over 2.5%. As a summary, global momentum improved and Indian ADRs are looking really positive. However, GIFT Nifty is indicating a flat opening and because of this oil price drop, Reliance might come under pressure today. And also there was a negativity around FMCG growth, especially in Marico. One more thing, yesterday for the 11th straight day, FIA was still a net seller. The net sold for approximately 4,425 crore rupees, while DIA net bought for near 1,770 crore rupees. Then, as per stock open interest, Axis Bank, State Bank of India, Siemens, Punjab National Bank and Persistent Systems got an increase in open interest along with a negative close indicates the short build-up. On the other hand, Escorts, Infosys, Ramco Siemens and HCL Tech got an increase in open interest with a positive price close, which means these stocks got the long build-up. About the things to look out, during our market hours, first around 10:30 am, Indian service PMI data is due, then around 2 p.m, Europe and UK's construction PMI data. Finally, in the aftermarket hours, US EIA scheduled to release the short-term oil outlook and usual weekly jobless claims. These are the some important items we need to keep an eye out today. Coming to technical, Nifty opened gap down, decisively broke the 19,500 mark and throughout the day had a volatile price action. I mean, during the first half, it fell, while in the second half, it witnessed an equally strong pullback and as a result, it closed well above the intraday lows 19,333. And on the daily charts, it formed a doji candlestick pattern indicating indecisiveness among buyers and sellers. But generally, such a pattern is formed after a consistent fall, indicating some possibility of a reversal in the trend. So, the zone of 19,320 to 19,360 is a crucial support as multiple parameters in the form of daily lower Bollinger Band and 20-week moving average is placed. Then, this hourly momentum indicator is on the verge of providing a positive crossover, which is a buy signal indicating that the fall is likely to halt and the probability of a pullback increases. In terms of levels, 19,330 to 19,300 is the crucial support zone, while 19,520 to 19,560 shall act as the immediate hurdle zone. Then in case of Bank Nifty, it's same as Nifty. It opened gap down and had a volatile price action. The consolidation of the last 4 trading sessions broke on the downside, which is a sign of weakness. The index has corrected around 5.3% in the last 3 weeks and is appearing oversold. So maybe we can expect some relief rally over the next few trading sessions. Anyway, in terms of levels on the downside, support is placed at 43,800 to 43,600 while resistance is placed at 44,400 to 44,500. On the weekly options front, the maximum call option open interest was at 19,600 strike, followed by 90,500 and 90,700 strike, with a maximum new call writing at 90,400 strike, then 90,500 and 90,600 strike. Thus, this data suggests the Nifty may face hurdle at 19,500 to 19,700. Then the maximum put option open interest was seen at 90,400 strike, followed by 90,300 and 90,200 strike, with new put option writing at similar strikes in same sequence. So the support is at 90,400 to 90,200. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.